If you follow trends, you probably know that 2024 will be the year of solid shampoo, secondhand in marketplaces and eco-friendly shops, as well as the year of gold. Right now, gold is at the center of attention. After leaving its holders out in the cold throughout 2022, it experienced an 8% increase in 2023. And since the beginning of this year, it has risen by 15.9%, reaching a historic high on April 10th at $2,382 per ounce. Gold is attracting attention as several global powers seek to alter the international financial system. In 2023, 1,000 tons of gold were sold to international financial institutions, an absolute record. It seems that gold has become the indispensable accessory to impress central bankers at social gatherings. For some, it is the cornerstone of a new monetary era and a powerful weapon against all risks, from international conflicts to climate emergencies, recession, devaluation, energy crises, and housing crises. While central banks in the South are buying gold in massive quantities, gold and the dollar have broken their historical link, signaling a profound change. And it's not over yet. Today, I will explain the underlying factors of this incredible trajectory, and you will quickly understand why humanity continues to cherish what Kees called its barbaric relic. Gold rush. Throughout the ages, the world has experienced several gold rushes, from Brazil in the 16th century to the Klondike in Canada at the beginning of the 20th century. However, the one we are witnessing today has some striking differences. First of all, it is not limited to a specific country or region. It is global. Moreover, it does not require the pioneering spirit to face hostile lands and extract gold from the depths of the earth oneself. Everything now unfolds from the comfort of an office, in an air-conditioned trading room. The jewelry sector has been severely affected by the pandemic, and global demand for gold dropped during the crisis. However, since 2022, it has been rebounding and reaching levels not seen since 2012. Upon closer examination, it is evident that central banks are driving this demand. Their share in gold purchases has significantly increased, from 605 tons per year before the crisis to 1,082 tons in 2022 and 1,037 tons in 2023, representing over 20% of global production, compared to only 12% in 2019 or 13% a decade ago in 2014. With this buying frenzy, prices are reaching new heights. The price of gold, which was hovering around $1,600 per ounce before the health crisis, reached a first historic peak on July 27, 2020 at $2,336, before setting a new record on February 27, 2022, flirting with $2,450 on May 20th. And this is just the beginning. The importance of gold. To understand, it is essential to remember that gold is not limited solely to being a precious metal, a safe haven, or a hedge against instability. It also acts as a barometer, indicating the level of investor anxiety, and has long served as a cornerstone of the international monetary system. From the early gold rushes to the end of the First World War, most major economic powers defined the value of their currency in terms of a certain quantity of gold. However, this gold standard was abandoned during the interwar period in favor of a system of floating currencies, where each currency was valued based on supply and demand, and each country had its own monetary policy. After the Great Depression of 1929, the ravages of the Second World War led to the creation of a new international monetary system, based this time on the US dollar, known as the Bretton Woods Agreements or Gold Exchange Standard. To stabilize this system, all currencies were valued in dollars, and the dollar itself was convertible into gold at a fixed price of $1.35 per ounce. However, the success of the Bretton Woods dollar came to an end in 1971, leading to the abandonment of this standard and the demonetization of gold. Now, currencies were purely fiduciary, and central banks were no longer required to hold gold to issue new currency. Despite this, gold retained its role as a store of value, a tool for wealth diversification, and insurance against inflation. It also reflects global confidence in the financial or monetary system. In the current system, although the dollar is no longer backed by gold, it retains its role, which is why investors turn to gold in the face of threats to the US economy. Traditionally, the movement of gold is linked to interest rates. Indeed, gold, an asset that does not yield interest, sees its price decrease in periods of high rates as investors turn to more lucrative investments. Conversely, in periods of low rates, investors turn to gold as a hedge against inflation. Currently, although rates are high and the dollar is strong, gold is experiencing a period of decline. This trend can be explained by various factors, and the relationship between gold, the dollar, and interest rates is not as direct as before. When it happens, with the increasing economic and geopolitical uncertainties, as well as questioning of the role of the dollar, many countries, especially emerging powers, are considering increasing their gold reserves. Some see this as the beginnings of a new global financial system, suggesting that gold may once again play a central role in a parallel monetary system. This idea resurrects John Maynard Keynes' concept of the barbarous relic, a famous economist of the last century. He was known for developing an economic model blending aspects of communism and liberalism, advocating for a welfare state intervening to correct economic failures while not opposing market laws. Keynes believed that gold, as a monetary standard, was a factor of inequality, benefiting mainly wealthy countries capable of accumulating large quantities of gold. Keynes' ideas are now resurfacing as they provide analytical tools to understand current events, especially in the context of a possible parallel monetary system proposed by Southern nations. This system could be based on a standard or other tangible assets, such as oil or coal. One possibility discussed is that of the banker, a single currency imagined during the Bretton Woods era, whose value would be based on a basket of currencies, commodities, and international trade indicators. In this perspective, while the gold exchange standard, though less universal, was preferred in the past. However, the idea of using the Chinese yuan as an alternative to the dollar is not universally supported among southern countries, and the yuan is not yet strong enough to assume this role. Thus, the use of a value basket seems to be a preferred option, similar to the concept of the banker. However, details regarding the values composing this basket remain to be defined, whether it be a single currency, gold, oil, or a combination of multiple assets. Why will it continue? The plan to create a new common currency by the BRICS alone is not enough to explain the increased global interest in gold. The de-dollarization of the global economy is a more tangible phenomenon widely accepted by observers worldwide, as it is already underway. Over the next decade, international transactions denominated in dollars are expected to decrease by about a third. For now, the dollar retains the confidence of investors, who prefer it over the euro, the pound sterling, or even the yuan. It also remains the primary global reserve currency, but its future is raising concerns. Growing distrust towards the dollar encourages emerging countries, whenever they have the opportunity, to exchange their reserves for gold, thus reclaiming a sign of sovereignty. Turkey, India, Kazakhstan, Jordan, and other southern countries have taken this measure to safeguard against any economic instability. Among the major buyers, Poland 105 tons and Singapore 73 tons bought gold in 2023 to increase its share in their reserves to 20% and even 40% for some countries. China was the largest gold buyer last year, officially to diversify its foreign exchange reserves, but also to anticipate a potential fall of the dollar. China's actual gold reserves remain unknown, but are estimated to be around 2,200 tons, although some estimates place them much higher, even exceeding 25,000 tons. If China plans to slow down its gold purchases next year, it will do so gradually. At the same time, the Chinese central bank and other national banks are actively selling their US Treasury bonds, expressing their desire to reduce their exposure to the United States. The reasons for this de-dollarization are manifold, from the trade war initiated in 2016 to the dispute over the status of Taiwan. Sino-American tensions have convinced the rest of the world that it is time to secure their economies or take additional assurances. This partly explains the growing interest in gold and the reduction of dependence on the dollar in the global financial system. Conclusion: we are facing an unprecedented situation where the links between gold and the dollar, as well as between gold and interest rates, have been severed due to intense demand. It is now conceivable that a new future looms for gold, perhaps even partially resuming its role as a standard of value. Despite a strong dollar and currently high rates, the price of gold theoretically should be low. But the opposite is happening. This phenomenon may accelerate if conflicts intensify and when the dollar begins to lose its value, unless a new unit of value emerges by then. If you suddenly consider investing in gold, No one will blame you, especially not Mike Berry, the famous big shortman of 27, who himself has just acquired gold for $7.5 million. However, buying gold is not as simple as buying stocks, and there are a few constraints to consider. When we talk about buying gold, we always mean physical gold, the one you can touch. It is essential to be able to transport it and store it under optimal conditions. Thank you all for your loyalty, take care of yourselves, and see you soon on Monevision.